Welcome back, guys. Good evening, good evening, good evening. How are you all doing today? And how was your day? I hope it was wonderful. It's fantastic. You know, I hope you did not risk too much. I hope you follow your trade. You follow your risk management. You follow your rules and everything. I hope you don't try to do more than you can afford to do. So basically, that is all. And today was quite interesting, but it's not favorable for a disciplined trader, right? Today is not favorable for a disciplined trader, right? Have that in your mind, right? Okay, I will explain further when I start explaining why I feel like I will explain further why I feel like today is not suitable for a disciplined trader reason except you are so experienced and there are many reasons behind it why I say that. And to add to this is well well we did see how price move energetically today, and that has left us with so many things to talk about. So I will not waste time and I will dive into what we did have today, right? So what you are looking at currently is the Euro US dollar daily contract for February 13, 2024, which is Tuesday 13, 2024. This is the daily contract, and I'll read the statement I have here. The Euro US dollar daily contract for Tuesday 13th February 2024 deliver perfectly as we call out from previous day projection. Today price delivery has led to a formation of a swing high, confirming the weekly or monthly bearish program. Meaning what I mean here is that yesterday, if you watch my video, the video I posted yesterday, I was referring to this particular area that if we did not, well, to me, I did not buy the idea of us passing above this place. And I said if we did not pass above this area, then I'm expecting us to have a swing high here, and that swing high should remain so significant. It should not be so vulnerable to price to be easily taken, right? And it just happened. So I'm very pleased to see Euro delivered lower into the monthly fair value gap or BC, and I am anticipating for it to be used if we traded through it. Then we can look forward for it to act as a resistance and deliver price lower into the daily swing low, sell side liquidity. Now, if you go on the weekly, this is not a swing low, but on the daily, it is a swing low. So I refer to it as a daily swing low. Just like I refer to that swing high on hourly time frame yesterday as an hourly swing high. Okay, if you are trading like this, you will want to be identifying each time frame swing high and how the market are reacting to them. Right? I don't know, but there is this concept behind me practicing this in every day, and I've understand so many things about price. That is why I tend to relate things according to time, because the concept is what time and price, and you can see it here, time and price. So whatever any PDRA I look out for, whether it's a draw on liquidity, I try to identify the time which that draw on liquidity is sitting on. Like this is a daily fair value gap, and I make sure I put it as a daily fair value gap. Why? Because whenever I look at it, whether on a smaller time frame or on that particular time frame, it will take my mind back that there is something here on a higher time, or if I'm on a lower time frame, I will like there's something here on a higher time frame that is drawing price closer. So that will give me a conscious mindset of how to react to the market. And that's just basically, we don't have much time and we have a whole lot to talk. I will have dived deeper into what I'm explaining. So this swing low is formed on daily. So I point it out as a daily swing low, which which is our next draw on liquidity. And if this is a fair value gap or monthly, if we pass through it, I will want us to dip back into it and use it as a resistance. So if tomorrow eventually if tomorrow eventually pass through this particular fair value gap, then next tomorrow I might anticipate that we might get to it and use it as a resistance. It will definitely act as a resistance to deliver price, and that will be so efficient if we added any new if there's any news event that's going to come up as well. So let's continue. Now, casting forward, since today has already delivered a large range day, we might not have such range anymore for the week. But going into Wednesday and Thursday, I am still anticipating for sell side delivery in price. And also, I am aware it might be a very tight range. What I'm actually saying is that every week there is either 2 days in that week or one day in that week that we have the largest expansion. And I told you guys before, if you are following me up, I told you guys that Tuesday, Wednesday, or Thursday. Let me say Tuesday, Wednesday are the best day of the week that has the highest range over time, meaning that the Tuesday tends to have higher expansion more than any other day. Tuesday or Wednesday has higher expansion on that day more than any other day. So if you are a weekly trader, let's say you trade once in a week, you want to know where Tuesday is likely to go or Wednesday is likely to go. That will give you a higher perspective. Just like if we are trading intraday, we want to know where the next session is going to go. That is how Tuesday and Wednesday or Thursday works, right? You want to know where the highest expansion of Tuesday is likely to go or Wednesday is likely to go. If you have this on your mind, then you can actually take one trade for that week and you will definitely get it. But there are so many factors you need to put together and determine all that. That is for you to study. Time is against me, and that is it basically. My draw on liquidity on the daily time frame is sell side delivery, but I am not expecting what higher expansion. But if we did give a higher expansion, that's a willingness. That is another significant um notation in price to give us a very big range, and that's another sign to show that we might likely look towards to come to this sell side liquidity and also to this fair value gap before we see a short time rally higher before we continue to this monthly external range liquidity. Or and up to that, I'm looking for tomorrow to give me a fair value gap on the daily due to the formation of this whole scenario. So I'm expecting a fair value gap on the daily time frame for Euro US dollar tomorrow. All right, this is the XY daily contract. Because of time, we try to be faster. So we have a volume imbalance here, which is this purple line I indicated, a volume imbalance, and we can see that today closed so impulsive, like we close almost to the brief of that candle, which are an indication that we are seeking higher prices and the market is not willing to even retrace a little bit at the closing price. So we are seeking higher prices and we are likely to go above this particular buy side liquidity, which is a daily swing high compared to the euro US dollar that have daily swing low. Now, because of this volume imbalance, that's also give me an impression on euro as well. Because if this volume imbalance tends to be very reactive or this daily bearish order block, but I'm not so interested in this daily bearish order block to deliver price or to have much effectiveness on price. But we also need to have that in the back of our mind. So if price it tends to react more on it. So we having all these context at the back of your mind will give you more high insight or about the market. Okay, but I am but with relatively with the current move on the market, we want to see price above here. But that means this might actually give us lead price lower to feel more inefficiency, then we now go back to attack it and actually trade through it. And this volume imbalance is must be very effective because it's an inversion volume imbalance. So anything inversion, I tend to like it very well. So if it might lead us below, that is maybe tomorrow, if we did trade to it tomorrow or next tomorrow, or that will give us TGIF setup on Friday, if tomorrow and next tomorrow give us a tight range. That is it basically. And also we see all this move, and I will explain so many things on a lower time frame when we get there. That is it. So let's go to the hourly. So this is the 4 hourly contract for Euro US dollar, and and it goes like this. The Euro US dollar 4 hourly contract shows nicely the price delivery for today trading range. Now on the 4 hour, we can see perfectly the euro we can see perfectly that euro respects the 4 hour bearish order block that lead the sell program for today trading, including the CPI data that enhance the fast delivery of price lower, meaning that this particular bearish order block I refer us to yesterday hold price on the 4 hour, and also we tap on the weekly fair value gap low, which also another factors that deliver this lower price. Now we can also see that the large volume we can also see that there is what a large volume of fair value gap or CB form in today price on 4 hourly, which might act as a short term draw on liquidity into that area. And also I am anticipating a higher resistance liquidity run towards the buy side liquidity to fill in the inefficiency. What I'm actually trying to say is that this inefficiency on price that is formed today, I am actually anticipating for a short time run to just fill a little bit of this inefficiency, and we might actually have a breakaway gap if we did not close, and that will give us also a daily fair value gap if we did not close above, if we did not close it totally. Now casting forward, I really don't have a significant draw on liquidity either lower or higher, cause I have elements to respect a higher uh run on price, and also I have a PD array to support a lower run on price. So I am only going to utilize a lower time frame high and low to frame my setups. What I actually mean there is that I don't have a significant draw on liquidity. Although I know we are totally bearish, but due to the formation of this fast fair value gap or volume, because it's so big on the 4 hourly time frame, even on a lower time frame. So due to the formation of this, we might actually see a short time run on this area, and that will actually affect you being going in bearish. But overall, that is overall, we are bearish and we are looking for this sell side liquidity. So because why I did not have a buy side liquidity is because I'm framing my ideas towards particular day, that is every single day. I'm not framing my ideas from over long time, but because I'm trying to project what is going to happen tomorrow. So that is going to give me a what short time perspective. My draw on liquidity on 4 hour is sell side liquidity, which is what the daily old lows. Now my entry, if I'm going to go towards that area, is what inefficiency plus lower time frame buy side liquidity sweep. If you go on a lower time frame, there is a significant swing high that is formed here, and I'm anticipating that to be swept, which will lead us to go lower. And if we swap it, we will also price into this area. Well, I'm supposed to go to the XY because of time, let me go to the 1 hour and explain the euro. Then if we still have time, we can go to the XY. If you don't, go to your own the XY and try to learn things by yourself, because I don't know why time is not even enough for me again. And to be sincerely, I am very fast. I'm trying to be so fast enough. So this is the Euro US dollar hourly contract, right? And this it goes like this. The Euro US dollar hourly contract shows nicely the intraday price delivery for Tuesday, 13 February 2024. The daily profile is an obvious 8 o'clock a.m. New York local time that as the high of the day that tap on the weekly fair value gap low and delivered lower aggressively, which is fostered by what CPI data, leading to a decent sell program and sweeping the sell side liquidity identified from previous week projection. This buy side liquidity have been identifying it since previous week, and today CPI data actually lead us to price lower aggressively, and all these aggressive move occur in today. And also we take out the short time high which I was talking about yesterday, where we swept above it and we rally lower. That is very, very, very sweet to say. Now, the low of the day is formed at 9 o'clock a.m. New York local time up close candle that just reprice higher after the energetic lower price move, which this particular candle, which is 9 o'clock, have the low of today price, and that just price higher immediately after this range move. Now, casting forward, with the close of today trading having a very decent close with a thick body, I use the fib level 38% to expect the retracement to stay below this area. If the bearishness is very effective, and also to tap and fill in some of the inefficiency formed in today trading range. My hourly drawn liquidity is sell side liquidity, which is equals to previous day low. This is today low, right? Sell side liquidity previous day low, which is this day low. And my entry should be inefficiency plus lower time frame swing high buy side liquidity sweep. That is this particular swing high on a buy side. This swing high, I don't want to add a line to it, so I've added the swing high, I've added a red line to that swing high. So if I am also looking for us to sweep above this swing high and lower. And what I was saying is that I measure from this particular body of this candle to this body of this candle, and I take out the 38%, which is this level. So if the bearishness is so effective, we are not supposed to see tomorrow come above this bearish. So if we did not come above this bearish, and we are also looking for, if we did not go above this blue line, and we are also looking for a small short time sweep on swing high, which is the lower time frame swing high to be swept, then we have this particular significant area to see as the hourly swing high, which if we swept it, then, and we're not expecting the market to go above here, if we are really bearish, then we can frame our idea of having an entry within this area, then expecting it to deliver lower. Then you can take your set your TP here, because this is almost, if it happened, this is almost 20 pips. Oh, let me, this is 40 pips. Wow, that's nice. And also, this particular trade is not that effective compared to yesterday on. So this one has a 60 to 40% chances, because there are so many ideas behind this trade. So it's 60%, 60-40. So it has 60% chance of occurring and 40% chance of not occurring. But yesterday was 20%. So that's just it. So I already know, but I am going to be looking at this price on a lower time frame and projecting my idea behind it. So let's go to the XY and explain some stuff. So also this is the XY. Sorry, let's go to the 4 hour. So this is the XY 4 hourly contract, and we can also see same thing happen here. We close at the brief, and currently we open, the new day has opened, and yet we are not even moving. So what I'm expecting here is that if we are so bullish, I don't want to see tomorrow the low of that day to go below this blue line, which is also the 38% region. I want to see that area hold price, and if we did not go below it, then we are, but are we, buy the idea of us sweeping below this particular 4 hourly candle low. So if we sweep below that, then we tap on this area, then that's a fair value gap, then that could foster us to move higher. And now that is basically on the hourly. So let's go to the hourly. So on the hourly, we can see that it is trying to move lower, and I frame my major ideas below this area. Although we don't have a swing high on or a swing low on the XY, but I'm going to be watching this market to see how everything happen. So if you still don't get everything possible, because I could not even read everything because it's a lot day and a lot of things to talk about. I hope this was insightful. If you enjoyed this video, please subscribe and